Hello, Maverick traders. Welcome to July 9th. It is Tuesday. Joe with you here. Let's jump into a market recap. I've got my 2 cents. You guys know how this works. Take responsibility for the outcome. First thing I'm going to do is break down the meaningful news of the day. We're going to break down the charts technically to see what these markets have been up to and share trades with the community as always.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Moving into the market analysis, you're going to see that we are hesitating a little bit after a pretty nice high base breakout set the end of last week. First off, how do we finish? I'd say all flat. Pretty much a flat day, which would be expected based on the power that they've put in over the last 5 or 6 sessions. The Russell actually down a little bit. Oil and gold just kind of doing what they're doing, and I really am just going to gloss it to that because, folks, there hasn't been a lot of change. Moving to the daily news, the Qs and the S&P show some slowing momentum after high base breakout, and I did want to emphasize that because it is slowing momentum. This is not bearish. Same sectors are leading with some outside large cap participation. I'm starting to see a little bit float into some of the larger financial companies and some of the larger healthcare companies. Advanced decline line, 55% declining, 41% advancing. Like I say, a little bit of a hesitation today, although all the majors did finish slightly positive. Above and below the 50-day moving average, it's 50-50. So let's move straight into our chart. Here is the SPY, and you can see that we had that very nice base over the last little bit here. I'd say pretty much through June, but what I like is when the 20-day moving catches up, it kind of creates an area for the rest period to kind of resolve itself, and we get another surge. Now, the volume wasn't super fantastic. It didn't really knock my socks off. However, it is definitely summertime, so that was to be expected. The last couple of days, sure, a little bit of a hesitation yesterday. Corey made mention of it, and I'm not at all surprised with what we got today. I'm actually looking for a little bit of a pullback. I'd like to see a pullback. It'd be a little bit more healthy, but we might not get that. We might just get some consolidation like we did in June, and then another move higher. We'll have to see what the markets want to do with this. Moving into the Qs, you'll see it's the exact same story. I'll go ahead and just draw that box since we're here. A little bit of a consolidation, tight range, high base, breaks out, pushes higher. A little bit of hesitation going on today. Once again, volume's not horrible, but it's up there. So where does that leave us? Well, it's basically exactly where we've been over the last little bit. But I really want to do a couple of things to emphasize, just to kind of remind you folks what's really going on out there. Let's start with the heat map. NVIDIA, good announcement today, strong news. Tesla is just on a tear going into what could be its earnings in the middle of July. But what happens in corrective action? Well, got a little bit of a participation in some of the larger drugs. We got participation in some of the larger banks. See, what I'm doing is I'm going to throw out Tesla. I'm going to throw out NVIDIA. Let's throw out some of those guys that we know that will push and pull these whole markets and focus on some of those larger cap outliers. And that's kind of where I'm leaning towards, is the financial sector and the healthcare sector. There are some good consumer stocks out there, but they do hit and miss. So basically, strength outside of technology and communications is kind of where you find it. And I found that to be in some of the larger cap. And here's that fun reminder I told you I'd show you. Every time I take a look at this, I just shake my head because I always use this graph here on Vimeo for how we did for the day. But when you take a look at the week's performance, last week was a very strong week in the markets overall, but it's not even close on the participation of technology and communication services against everything else. And here's a 1-month view. Here's a 3-month view. And yes, folks, this would go back 6 months and even for the year, and nothing changes. These big green bars just get green. Everything else just kind of hangs on while these just take off. So when you get a corrective action like today, a lot of it was little bit of red and everything because it really didn't do too much. But you can see where the money is going and where it has been going and where I believe it will continue to go. Figured that chart would be interesting and maybe remind you of what to stay focused on. However, the overall markets are absolutely influenced by these large companies, and so we are sticking with our +3. Nothing's changed. If you guys want to, if you're thinking like me, I do expect a little bit of a hesitation, maybe even a pullback, but I'm not going to try to jump bearish on any of this. I'm going to jump bearish on the bearish charts I've already been looking at for a while, but understand that if the markets do pull back, some of those bears can bounce super hard. So I'm going to look at this as more of an opportunity to buy after the consolidation or pullback than a time to short when it rolls over. So let's take a look at some of the trades I'm talking about. I went ahead and put out Morgan Stanley, Citigroup. I've got Roblox. I thought was a pretty interesting chart. That looks pretty strong. Now, Amazon's still good. I carried that over, but all the bulls that were there last week that I talked about are still strong. Bull side. On the bear side, UPS is one that I want to highlight. It was good last week. Las Vegas Sands is one that I took off because it did break down from last week and it's kind of extending itself. A great bear that's confirmed. Caterpillar still looks good. These all look really, really good. RRC is another one that is worth checking out. And Mosaic looks like it's at a bottom and it could bounce, but I thought UPS would be the most relevant based on where it's at. Let's start with Citigroup. Citigroup's got this nice little pullback. I love a couple of things with this chart. Once again, Citigroup is one of those large cap in its sector. I love the crossover. I love this range up here that it tried to hesitate at, but it's got a nice move to the upside, confirming a breakout. Now, Morgan Stanley looks very similar to this, folks, except it's kind of at this type of candle. Same type of pattern. It's not quite breaking out. Both of these do have earnings coming up in the next couple of weeks. I think they're the 15th of July. So be mindful of that if you want to trade either of them. Let's jump straight over to our bear here. This is UPS. UPS was on my watch last week, and it was in the midst of this bounce, but it looks to me like it wants to start to continue with the descending triangle pattern, a little bit tighter of one, but I just love to see this. This was definitely the confirmation. It does have to get below this level before, and it has meandered since I looked at it. I've been looking at, basically right in this area, waiting for kind of a choppy bull pullback. But my whole goal is for this to break that line, and it looks like it's getting closer, so I figured I'd share that with you guys. So that does it today, but be mindful. We could see more corrective action this week. We might not. It might get a little head fake. We might get just a huge blow-off top tomorrow, and then the correction comes later in the week. Look for bullish opportunity on the corrective action. Don't look to say, hey, the markets are rolling over. Let's jump into those bears. Because with corrective action comes corrective action in both directions. We will see a lot of those bears bounce. It's still a good time to step back, to enjoy the summer, and I would add that as well. We should see some market reactions to political changes and announcements, posturing, who's going to do this, who's going to do that, where the polls starting to go, whether we'll get there. I don't think we're going to be able to avoid that all the way through September. Economic reports, 3-month high in consumer credit. So it was a pretty good jump. But what I want to push with that, folks, is we have an aggressive consumer. This economy is strong. People love to buy things. And yes, people are investing in the markets. They will be buying these hot stocks. And so I don't see that really slowing down much. So understand that we have a bunch of fuel that's being thrown onto this fire to keep this bullish charge going on. CPI and the PPI come out this week along with jobless claims. I don't expect much change there. Earnings season is rolling out. Corey made mention of this yesterday, so check your earnings as always. All right, folks, thanks for joining me today, and we'll talk to you next time. Bye, everybody.